Salam everybody, this is Investor Shake back at it again with another video. Today's halal stock pick of the week is Lowe's, ticker symbol LOW. Stock price is at $193.02, and Lowe's is a nationwide chain of home improvement and hardware stores. So the key stats are it has a $136 billion market cap. It pays an annual dividend of $2.34. The 52-week low is 121.84 and the high is 215.22, so it is a little closer to the high. PE ratio is at 23.53 and the earnings per share is $7.75. So a description of the company is: Lowe's is a Fortune 50 home improvement company serving approximately 18 million customers a week in the US and Canada, with fiscal year 2019 sales of $72.1 billion. Lowe's and its related businesses operate or service more than 2,200 home improvement and hardware stores and employ approximately 300,000 associates. Lowe's supports the communities it serves through programs focused on creating safe, affordable housing and helping to develop the next generation of skilled trade experts. So with that description, it does make it seem like they're operating with a purpose to build more houses and provide skills to the next generation, because getting a trade is definitely a lucrative career path, especially if you're providing a service that is of high demand, whether it's a plumber or building a house. Chances are you will be going to a Lowe's or a home improvement store to get the supplies and tools needed to get the job done. So looking at the description in Robinhood, it says Lowe's engages in the retail sale of home improvement products. The firm offers products for maintenance, repair, remodeling, home decorating, and property maintenance. It also provides home improvement products in the following categories: appliances, bathroom, building supply, electrical, flooring, hardware, paint, kitchen, plumbing, lighting and fans, outdoor living, windows and doors. The company was founded in 1946. So this company has been around for decades, and they sell a variety of products, whether it's for large projects or small do-it-yourself projects. It's going to appeal to a variety of people. And you can also purchase appliances to furnish the house with. So let's take a look at the financials. So with the stock price, it's at $193.50. When you look over the past 5 years, the stock price has more than doubled. Of course, we did experience a big drop in the stock price in March, as it was as low as $66, but then it recovered throughout 2020 and continues to have an upward momentum in 2021. Now, with a company that has been well established in the home improvement space, this is a company that does expect to increase in valuation over time. So I do envision this stock being above $200 later in the year. I mean, it did reach $215 back in May before dropping to the 190s due to the recent earnings report. But this is just short-term volatility. After all, you have to go through short-term pain to get the long-term gain. So the dividend is $2.40 according to Yahoo, which is a 1.26% dividend yield. It may seem small, but that yield, when you take into account the long-term growth of the stock price as well as the dividend growth, this stock will be beneficial to own if you keep it for at least for 5 or 10 years. And if you have a drip, if you get the dividends and reinvest them into the stock, it will definitely increase over time. So this is quite beneficial for a long-term hold as opposed to a swing trade, because it does provide a dividend and it does have dividend growth. So as you see, the stock has had increasing revenue year after year, positive earnings, and a little bit of a dip in quarter two compared to Q3 of 2020. But overall, performing pretty well. It's a well-established company, so their finances do look pretty promising. According to the analysts, it's between a strong buy and a buy, with price targets as high as $250 and as low as $198. So you will profit if you were to purchase it at $193. So let's take a deeper look into the financials. It is profitable as it has a $6.8 billion net income. And then looking at the balance sheet, they have $46.7 billion in assets. And then looking at the liabilities, $45 billion. So it's pretty close to their assets. And one of the issues is their debt. They have $20 billion in long-term debt and over 1.1 million in current debt. And as a result, that causes their debt to equity ratio to be quite high, as it is at 62, because you divide the short-term and long-term debt, you add that together and then divide it by the shareholder equity, and they do have a lot of debt, which does explain their very high debt to equity ratio. And according to this website, they say that a high debt to equity ratio generally means that a company has been aggressive in financing its growth with debt. This can result in volatile earnings as a result of the additional interest expense. So that's one red flag to look at in Lowe's stock, is that they do have a lot of debt. But overall, the debt is being used strategically, and they are profitable as a result. So it's only a matter of time before they actually pay off that debt aggressively to decrease that burden. But again, they are operating pretty well. It is a successful company, and they are generating a good amount of revenue. So they did have their earnings report recently, and based on this article, this says that the stock price slipped, considering that it was in the 210s in the early part of May, and then it came tumbling to the 190s. But I see it as short-term volatility. So they said that they were down 2% after earnings. The company beat earnings expectations, but the bulls aren't gobbling up the stock in response. So, looking at this article, well, I guess this guy's planning on getting the stock into 180s. But yeah, usually in earnings reports, the stock price is going to be volatile. You may see the stock price rally in anticipation, and once the results have been announced, you may see the stock price either shoot up or plunge down. And it's probably a good idea to not invest before an earnings report. Just let the emotion happen, and then the stock should be a good price to buy into. Again, it's very volatile. So, all in all, this is a very well-established company in the home improvement space. A lot of people do visit Lowe's. It has a really good revenue, but the red flag is the amount of debt they carry. However, I do believe that this would be a good stock to own as a long-term hold. But then again, I'm not a financial advisor, so please don't buy this stock just because I'm talking about it. Do your research, and if you like what you see, I would consider adding this to your watch list, or perhaps purchase some shares in a Roth IRA. This is Investor Shake, checking out.